afternoon, everyone, and welcome to PBA at noon. This is going to be our new Zooms in on silver, and I'm Paul Benwell, and Sophie is going to be with us, but she's going to be in the background today. And today we've decided to have a roundtable discussion on silver. We have with us Peter Clausi, VP Capital Markets and Director of Silver Bullet, Chris Thompson, President and Director of Research at eResearch Corporation, and Peter Krauth, Editor of Silver Stock Investor and Gold Resource Investor. So I'll go around to each one of you and ask you to introduce yourselves, and then we'll start getting into the discussion and finally take some questions at the end. Peter Clausi, would you kindly start, please? Tell us a little bit about Silver Bullet and your role with them.
Silver Bullet Mines is a new transaction coming to market on the TSXV. We have 5 former producers near Globe, Arizona. Globe is like Timmins and Winnemucca. They exist to support the mining industry. We can put the first of those 5 back into production in less than a year for under $1 million Canadian and use the cash flow to fund the development of the other projects. Financing is underway now. It's been very well received.
When are you going to list?
That's up to the Venture Exchange. The listing app is in with them, so it's anywhere between 2 and 10 weeks.
Okay, I got you.
We're targeting the end of March as being realistic.
Okay, perfect. All right, how about Chris? Why don't you introduce yourself and give us a brief update on what you're up to?
Yeah, thanks, Paul. My name is Chris Thompson, and I'm the president of eResearch. We're an issuer-paid research company, been around for about 20 years. We produce reports primarily focusing on mining and technology companies, both in Canada and the US, and focus on the undercovered space. So that usually means the small and mid-cap companies that are publicly listed.
Okay. Now, Peter Krauth. Peter joined us yesterday, so he's back again today by popular demand. And Peter, can you just introduce yourself and briefly explain what you do?
Thanks, Paul. So I edit 2 investment newsletters. One is called Gold Resource Investor, and the other is Silver Stock Investor. I've been researching and writing and investing in mining for about 15 years, and happy to be here with you and give my insights.
All right, perfect. All right, well, thanks, gentlemen. Let's get this thing started. Why don't we start with Clausi? And by the way, I'm calling him Clausi because we have 2 Peters. He's a good friend of mine, so it's okay to call him Clausi. And I'll call you Peter now because I'm addressing you. Why do you think investors are flocking to silver at this time? I know gold is lagging, but why is silver in the last 3-4 months really like perked up and becoming popular?
At the mining show in 2020, I was specifically looking for a silver transaction. A friend of mine had turned me on to the fact that the commodity house was physically short silver and that someday there would have to be a reckoning. I couldn't find a good deal at the time. I since ran into my good friend John Carter, who asked me to help on his transaction, which is Silver Bullet Mines, the 5 former producers I talked about earlier. This is different from the GameStop phenomenon, an expression of urban anger. This is a physical shortage of something that needs to be consumed. And what the investors need to realize is this is a real thing. Like, let's say Ford is building F-150s. It needs 1 million tons of silver. It places a long order for 6 months from now. And when Ford backs its 18-wheeler up, it needs that physical silver. And if it's not there, the commodity house is in trouble. If the house is short, the house has a problem, has to go into the market and buy.
Okay. Chris, what's the difference like now versus, let's go back, a few years when the Hunt brothers took a run at silver? I mean, I know there's no, but what's a different market scenario as far as where silver is concerned, and the price went up to $50 or over when they took a run at it?
Well, that was an artificial demand, caused by an imbalance in the supply and demand when someone tried to corner the market. I mean, today, we have demand coming from, for silver, it comes from things like jewelry. There's a huge industrial use for it. As well as there's an investment side of the equation. And right now, what we're seeing is sort of everything firing on all sides for this, especially, silver's being used in a lot of the, the new technologies from, battery metals into things like, silicon wafers and into things like, the transmission, the power, like windmills and wind turbines. And so there is a physical need for it to be exploited and put into industrial production. And so I think that we're seeing that demand coming through. That's fueling a bigger rise. In the last year or so, I think that the jewelry market has it was pretty slow in 2020 with COVID, impacting a lot of retail sales. And so I think you're seeing that now coming back into the market where people are coming back in and making jewelry and selling jewelry. So I think, the demand side is improving on all fronts. And on the other side of things, we do have a supply constraint. If you look at the production numbers, there has been a decrease over the years. So I think what needs to happen is there needs to be new mines come on board to satisfy this demand, or you're going to get this imbalance in the market.
That'd be us.
Yeah, that's right. Now, Peter Krauth, can you embellish on that? I mean, from your past, like looking at silver for years now, where do you see, we talked about this a little bit yesterday, that there's X number of ounces out there that are produced every year, but the ETFs own like more than what's out there. So,
exactly.
I mean, that's kind of like a potential short squeeze, but it's not, it happened a little bit, but it's not really happening. So what's your outlook for the next 6 months as we move forward from here?
Yeah, I mean, I think at a minimum, we're going to see silver continue to stay strong. Of course, to some extent, it's impacted by what gold does. It's impacted by what the dollar does. But I think that demand is here. Attention to the sector is here. I think that's going to persist for the next while and for the next long while. You're right. Investment demand for silver, I think, is kind of the wild card. These other things that we've talked about, industrial jewelry, all of that's in place and growing. But as we've seen, especially in the last month and even in the last several months, the demand side is the wild card. And, if you look at ETF holdings, we talked about this yesterday, like you said, we're over 1 billion ounces. The Silver Institute thinks that's going higher. Holdings were up. Net investment was up, I think, 12% in 2019, 16% in 2020, and it's expected to be up 18 to 19% from last year, this year. So, I mean, it's hard to ignore that part of the equation. I really think that's going to continue to push things higher, and just sort of layered on top of everything else. And it's just a confluence of factors, that a perfect storm. We're going to see silver considerably higher.
Okay. A couple of things I'd like to add to that.
Sure, go ahead.
The billion ounces, that was the total global production of silver in 2019. So one entire year production is with an ETF.
That's right.
Which is a little bit mind blowing. Looking at my chart, jewelry was the second highest use of silver in 2019, and photovoltaic sucked 100 million ounces. So that's for solar panels and the like, which is a growing industry. You mentioned silver might be dependent upon gold. I have some hearsay about the gold-silver ratio. I was talking to Chris about this the other day. The gold-silver ratio is like quantum physics. You can't measure the speed and the location of an object without affecting it. The gold-silver ratio is the same thing to me. Because we all know what it is, it has been rendered meaningless. We are trading off other people's expectation of the ratio and not the ratio itself.
Okay. Chris, I mean, you've been researching for a while. I mean, how important is the investment demand out there, like, to get this going? I mean, what has to be done to produce more silver, or to get more silver out there? Is it just, and basically, what's going to help it get more silver out there?
Well, I think that, in this case, there's a lot of projects out there. I mean, a lot of the silver projects we're seeing, you have to look at, things like the grade and the location of the project itself. But a lot of mining exploration is purely funded by, putting together a drill program, and that's what you have to take to the bank and defining a resource, and that takes time. And that's where you have like, a 4 to 5 year plan where you can define enough of a resource to figure out if it's economic or not. And a lot of the high grade, resources have already been developed. So you're having to find lower grade and finding more of it to make it economical. And that's why, you know, when you look at projects like Peter's, where they already have infrastructure and they're going to come to market faster, you hope that they can exploit the opportunity right now to get into production faster. There's always a risk involved, but you know, if you do, and Peter, maybe you can comment because I did, you know, watch the video on your website. So it looks like the access to the mines you have are pretty available right now. Like I saw some of the videos from the underground. Maybe you can comment on that.
Sure. So the first mine to go back into production is called the Buckeye. Over $6 million has been spent here since 2012, grooming the property for this very event. Usually when I tell people about restarting a mine, I get the eye roll and I've seen this movie before, because we have. But it really is different at this property, given the amount of investment that's already been in. Management did a dry run in 2017, 2018, and produced 500 ounces from 5,000 tons. They're sitting at John's house in Oakville, Ontario. Sorry, John, if you get broken into tonight, that's my fault. And it's weird because the bars are kind of orangey because there's a lot of copper on the property. So it has that reddish orange tint to them. We're acutely aware of getting to market quickly. We're acutely aware of being cheap with the investors' money. We want to get the second mine started. It'll be about a year and a half after. And the second mine is the McMorris. It's the source of the legend of the Lone Ranger's silver bullets. A little bit of romanticism to the story.
Peter Krauth, geographically, I mean, silver, there's a lot of silver in Mexico.
Right.
In your opinion, where's the safest place to be if you're investing in silver?
The first places that come to mind are the US, places like Peter's projects, Arizona, Nevada, Idaho. Besides the US, I guess certainly Canada, Mexico is up there, obviously as the biggest producer as a nation. Alaska, probably to some extent as well, the Yukon, absolutely. And so those would be the first places that come to mind. That's where I would look first.
Which countries, Peter, which country is the top producer of silver? Is it Mexico?
Mexico, that's right.
Yeah, but the problem with Mexico, from my perspective, is the other metal that's prevalent there is flying lead. And I'm not going to put work teams at
Okay. Chris, can you comment on that? I mean, like, what do you, I mean, if silver in Mexico has been around forever and ever, obviously, but are they depleting their resources, or, you know, like where are we heading here?
Yeah, well, I see a lot of activity. You still see a lot of activity in Mexico on the mining side because it's a very rich resource country, and it's a fairly stable jurisdiction for mining. You know, barring Peter's flying lead comment, which I haven't heard before, which I quite enjoy. I also see a lot of activity right now in Argentina. You know, but from a political stability, you know, you always sort of look at the Fraser Institute to try to find your jurisdictions. Because that's often the risk factor that investors don't look at to sort of say, you know, when looking at a project. So Mexico is a good place to, you know, invest because of the resource, but stable jurisdiction in the US, of course, is much better, especially with the mining laws in places like Arizona and Nevada, which are very mining friendly, have been operating all through COVID because they know how important that is to their state's economies.
Yeah, there's an infrastructure issue here as well. Silver is one of the 35 critical metals identified at the end of September that have to be protected in the US supply chain. President Biden made another announcement about the preservation of a critical metal supply chain. The United States is a net importer of silver. Like, okay, you can understand uranium given the problems in mining it, but to be a net importer of silver is a bit of a head scratcher.
Okay. Now, for the people that are listening in, please, do you have a Q&A box? If you have any questions, you want to pipe in, please send us the questions and we'll take care of them. We'll make sure that they're asked.
Well, there was one that was in my inbox and has since disappeared. The question was, is there a public record of who is short silver?
Yes, I was just going to ask that. I'm going to have to stop you from looking at the box. Can you answer that, Clausi?
I will defer to the market analysts.
Chris.
Yeah, I don't know. I mean, I know that you can track the short. They track the shorts in the market, but I'm not sure if they actually have who's actually doing it. And maybe this might be a good place to comment on you know, any conspiracy theories out there. because there's often chatter both on the gold and the silver side that the prices are artificially constrained by investment banks who are making money off both ends, and it's hard to track those sort of things. But definitely if there's ways that they could do it, I wouldn't be surprised if they have done things like short and covering things with their own methodologies within the banking system. But you can track the shorts. They keep track of that online, but I'm not sure if they actually break it down by any specific group that has the shorts out there.
Okay. And Peter Krauth, going back to yesterday talking about the ETFs, at what point do you think where production is not going to meet the demand? And I guess the question behind that is, what is going to really fuel the demand in the next couple of years? What main sector? Where is it going to suck all the silver out of the market, or is it needed to be? And then Clausi, you can answer that one next.
Yeah. The first part about how long it's going to take, I think that it's probably not going to take all that long. I think in the next few months, we're going to see silver, certainly take out last year's high. And I think within a year, we could probably see it take out its all-time high. And in terms of, let's say a year and a half, something like that, sometime probably in 2022, we could see that happen. In terms of, where's all that silver gonna go? I think all the sectors that we talked about. I mean, I think, like I said earlier, all investment demand's going to stay up. All the industrial applications are going to stay up. Something we haven't touched on is all the medical aspect of silver applications. Things, COVID has made us, I'm going to say, a little bit paranoid, perhaps in some ways, maybe in a good way, but we've seen that drive applications of silver in all sorts of things, where you're looking for trying to minimize the spread of viruses or anything like that. So you've got it in fabric, you've got it in masks. Actually, some masks have them. You've got it in, it's almost endless in terms of the kinds of things you're seeing and very regularly in terms of silver applications on the medical side. So I just see it from all aspects. That chart, that pie chart that shows you, percentages from different sectors. I think every one of those is obviously, you can't go beyond 100%, but the net sort of total number of ounces going to each of these is just going to get bigger. And so the pie is going to get bigger, and it's just going to go from there.
Okay.
Just
Chris,
to touch on to touch on the medical side of things, because both copper and silver have antimicrobial, antibacterial properties, and it's really been exposed over the last year or so of how bad, in fact, stainless steel is at prohibiting this. And there's a big push right now to see what they can do about putting either silver films or copper films or sheets over top of counters, especially in hospital situations, to stop the spread of bacteria is the biggest one right now. But COVID has obviously taken the limelight. But in the hospitals, they're still fighting the superbugs, and they're trying to find different ways of making sure that's not spreading. And both silver covered or copper covered counters are much better at prohibiting the spread of both bacteria and viruses.
Okay. Peter Krauth, are the ETFs fully invested in silver? I mean, because I've looked at some ETFs, and it's it's supposed to be a silver ETF, and they've got gold stocks in there. They've got other kind of like things in there. Are they like fully copper, or what's your opinion?
So you mean the equity ETFs?
Yes.
Right. No, they're not. I mean, I don't know off the percentages offhand, but if you go and you look at the breakdown, for example, of the silver SIL or silver juniors, like you say, there are going to be some companies that certainly are not primary silver producers. In fact, you can practically count those on one hand today in terms of the larger ones, and you certainly have companies that are primarily probably other metals, gold and some base metals in some cases. So it's true that, you know, it's just, I'm not going to say misleading, but if people think that when they buy a silver equity ETF, that they're just buying silver companies, they're wrong. I mean, it's going to be, you know, a majority of the holdings, but it's certainly by far not exclusively silver.
Right,
Okay,
but
so then-
that's not to blame the ETF. Silver by its nature is rarely a primary metal, and rarely does it appear in an economic deposit on its own. So for the ETF to gain access to the silver, it has to buy into a gold company that happens to have silver, or copper that has silver. So I don't fault the ETFs too much for that.
All right, I understand it. Now, Chris, so, I mean, yes, silver is like a byproduct. I mean, a lot of times. So.
Can we go back to that for a second?
Yeah, sure, go ahead.
That means investors have to work harder when trying to do comparables for silver companies. Do you break out the gold? Do you break out the copper? How do you value the silver? Unless they're pure silver plays, it's really difficult to do market comparables.
Okay, Chris, can you comment on that?
Well, yeah, I mean, you have to go look, especially in the producers. I mean, I focus mostly on the exploration companies, so it's a little bit easier because you typically will have pure plays in the exploration side of the business. But as Peter, they've commented, a lot of the production comes out of a byproduct, you know, or getting, you know, credit for the other commodities that might be in there. Like often there's gold associated with the deposit. So yeah, when you're looking at the comps, you have to really be looking at, you know, the pure silver explorers, you know, the ones that have a silver resource, and that's their main focus, because it's quite easy to look at a comp and be you know, and not be comparing apples to apples when you're looking at the companies.
Here's a question that came in. Will silver have a very long-term demand cycle, or will new technological advances dent its demand levels? Anyone? Peter Krauth.
Well, I'll jump in. I don't think so. I mean, there's so many applications that, you know, I'm going to say the first one that comes to mind that, and it's certainly not exclusive, but is solar. I think that it's so difficult to find a metal that has the reflectivity of silver. And if you look at electronics, it's so difficult to find metals, maybe gold, but it's a lot more expensive per ounce, that has the ability to, you know, I guess the idea is to, you know, to allow for connections, electrical connections, and that sort of thing, connectivity. Silver's essentially irreplaceable in so many ways. So I don't see that demand falling off. It's so widespread as well, and it's used in so many things, and it's still cheap, relatively cheap. So in that sense, yeah, it's definitely got a long run.
I just did a quick search. The average Tesla has 1 kilogram of silver in it. Your cell phone has about 0.5 gram of silver in it, which is far more than the lithium. So unless you think electric cars and cell phones are going away, silver demand will continue.
Yeah, there's 2 points. 2 points I just want to add on that. I mean, silver has been used for about 4,000 years as a currency. So I don't think that's going away anytime soon. And also it's been used and will still be used in jewelry. That demand itself, you know, will keep things moving forward. As they also been mentioned, it's the actual physical, you know, conductivity properties of the actual metal that you can't replace by artificial means. And so, especially at this price point, you know, gold has some benefits as well, but it's much higher. You know, it's 50 to 60 times higher now, depending on what the ratio is, right? And so you have to be looking at the physical properties itself, as well as that once it's in an industrial process, you know, companies, manufacturers tend not to want to change their processes because the cost of changing is much higher than introducing something new. And I think, you know, as we move forward with the Green Deal, you're going to see things like the solar panels, the EVs are going to continue to move forward into more of an electric type of transportation network and power through, you know, solar panels and wind turbines where they use, you know, more silver in it than that currently is. And then so that side of the demand will continue to grow as well.
And one other thing, GameStop was its own phenomenon involving paper. There's a physical silver here. I was talking to my friend Greg last week. He and his friends have been buying up physical silver online. You can buy paper silver for $27 an ounce, but the physical silver will cost you $40.
Okay, now that's a great point, Peter. Peter Krauth, silver, physical silver or stocks?
Sorry, physical silver
or buying stocks or equities. What's the better choice, or what?
Or silver equities, right? So yeah, I mean, both. Yes. So the answer is yes. Yes, because you really should, I think, own both. They both have a place. The metal itself is obviously a foundation. And so beyond that, certainly, and in different risk levels, you would want exposure to silver equities at everything from, the safer royalty and stream companies all the way down to the junior explorers. And everyone's got a different comfort level. You don't have to go to the explorers. You certainly want exposure to at least, I'm going to say, some of the larger ones, but why not explorers and just do it if how can I put it? It's certainly a lot of fun to invest in an explorer and see it go wild, see the price go wild. And you don't have to take outsized risks to do it. Put a few $100, put $1,000 into a junior explorer, and maybe even spread it around a little bit. But in the last cycle, I think it was 2005 to 2008, Wheaton did something like, I think it was 8 or 10 times. So this is probably one of the sort of least risky silver equities you could invest in. Obviously, it's less silver than it used to be, but still, it's a lot of silver exposure. But there's something for everyone, and I think that people definitely have to have exposure. Juniors have their place, and there are all sorts of juniors as well. Peter can tell us about that. I mean, it's not just pre-discovery. You've got juniors that have all sorts of assets, existing assets that have existing proven resources that, like in his case, are just pre-production in a sense. So the scale is there. People need to choose what they're comfortable with and decide at what level they want exposure.
Hey, Chris,
Yeah, sorry, can I comment on that a bit?
Yes, please go ahead.
Yeah, so when looking at investments, myself, I always look at where is the risk and return. Definitely if you want to own the bullion, the actual physical silver, it's good to have. You can have it, you can hold it in your hand, you can see it, but the return on that is probably going to be, if silver has a really good year, could it move 20% or 30%, from low to high, type of thing, right? It's already trading at a peak. It's going to go up on a pretty regular amount, unless there's, again, some sort of black swan event that happens where it shoots up. But where you see more leverage is with the Explorer codes, right? Where you can see a company that is in the 10 to 30 cents. If they come online, if they get production, if they define the resource, these can go from 10 cents to 30 cents, 30 cents to $1, $1 to $2, where you see that magnified return. And that's why when I'm investing, I'm looking at a basket of exploration companies. I'm looking at physical, but the other option you can look at besides the ETFs is the royalty companies. Are those companies right now who are financing exploration companies, and they're a good way, a safer way sometimes, because they get the royalty on the production. So that's another way you can invest.
Clausi, a question for you that just came in. Corporate question for Silver Bullet.
Yes.
Is there a broker sponsor in place for the IPO plan? And is the prospectus available on CEDAR?
There is no prospectus. There is a listing app. There's a technical document and a presentation. The asset is being reversed. It's doing a reverse takeover with a CPC called Pinehurst One. All the information is available at the Silver Bullet website.
We lost Chris for a second.
And if anybody wants to message you, I'm happy to send along whatever documents and links are necessary.
Okay, we'll that.
Can I get back to that point? Chris's point?
Yep.
we had a choice in silver bullet. We have 5 former producers. So you just go pound lots of holes and put out lots of news and lots of excitement, or do you do the smart thing? Get into production, start generating cash flow. Because if silver craters, we're still in production. We made the choice to be smart. It's like you're golfing. I could either try to drive it across the water, or I could just wedge it over there, then wedge it up in the green. We're trying to do the smart thing here. Get into production early.
I got you. One last question coming in here. Are there any industries that are not running due to the virus globally that will increase the demand for silver when things open up?
Aircraft, maybe. Aerospace manufacturing. It's the only one that comes to mind.
Okay.
Yeah, aircraft is the one I can think of that they've curtailed things, but.
All right, we're going to wrap this up here. Is China's current commodity stockpiling going to exaggerate the price movement for silver among other metals and rare metals? Why don't we each answer that, and then we're going to wrap this up.
I would ask Jack Lifton that question. He's far better positioned to answer it than am I.
Okay, Chris?
Yeah, I don't think, I mean, I think that whatever an individual country does is not going to impact it, too much at this time frame. I think the demand for silver in this case, from a use standpoint, the demand is going to be there for the next 4 or 5 years as we, as we see the growth in the EV industry and in the solar panel industry, and as we move this to the green shift, with the other demand still being there, like the jewelry demand is still going to be there, and the investment demand is going to be the wild card to see, how fast the price will move up and down. And so the economics of any project, you're looking at as an investor, make sure that they are a low cost producer, whether they can, produce and come to market, even if the investment demand makes the price fluctuate down as well as up. So you got to be careful. Just make sure you're protected on the downside.
Gotcha. Peter Krauth, a final comment from you, if you don't mind.
Yeah, well, I mean, I like the other Peter, I can't really comment on the rare earths aspect with China, but what I will say is that they are, I believe, the biggest, if one of, if not the biggest producer of solar panels. So there must be a lot of silver consumption in China for that alone. They love their jewelry, they love their gold, they love their silver, I'm sure as well. And so I would certainly expect, demand to hold up from China for this metal.
And Clausi, a final comment from you, please.
Chris was just talking about the royalty streamers. They tend to get valued at about 10 times annual cash flow. The leverage to a junior producer is incredible. Let's make up numbers. You're worth $10 million today. You get into cash flow and you generate $5 million of free cash flow. You don't deserve a 10 times multiple, but a 7 maybe? You've gone from a 10 to $35 million and mitigated the risk.
Gotcha.
So the best leverage, as Mr. Peter said, is probably in the junior explorers who are near-term producers. If the metal doubles, woohoo, but if a stock doesn't double, you're doing it wrong.
Gotcha. Gentlemen, thank you so much for today. They were very informative. I like this style. I think we're going to have some more panel discussions like this. If anybody out there has any questions, please forward them to Sophie or to myself. We'll make sure we can direct them to Peter Krauth, to Chris, to Clausi, and we'll get some answers back for you. Stay tuned for Silver Bullet. Looks like it's going to be publicly listed. You said March, Peter?
End of March is roughly.
All right. So we'll keep everybody posted on that. Again, thanks to everybody for joining in today. Be safe, be careful, and we'll talk soon.
Thanks, Walt.
Thanks everyone.
Thanks,
Take
Peter
care.
and Peter.
Thanks very much. Thanks, everyone.